Welcome to my as yet to be named afternoon pre-market show. We'll start by looking at where the markets are going and where is Tesla going, and is this the bottom for both, or is there more risk to the downside yet? There's so much negative sentiment out there right now about EVs. What is it going to take to change that? Meanwhile, the Model 3 is being delivered in Europe and China and other markets, and the Model Y continues to set records everywhere. And Tesla's fourth quarter seems to be as solid as anybody can ask for. Who stands to gain from these dread and woe headlines? This is Randy Kirk, and as I mentioned, this is the new show. Every afternoon, approximately 5 to 5:10 in the afternoon, this show will come out, and we'll talk about the economy, we'll talk about the stock market, we'll talk about the macro, we'll talk about Tesla specifically, about news that's happened today, the big news, the news that could move markets. We'll talk about Tesla fundamentals. We'll talk about things that are going on around the Tesla stock. And all of that will be every single day, Monday through Thursday, rather, because on Friday, of course, it's Larry and Randy show, the Good News Friday show. But on Monday through Thursday, we'll wait until the bonds, the pre-market starts for the bonds, and that's when we'll start the show each day. If that's a great idea, hit like, hit subscribe, hit notify. I'm trying to put together some co-hosts for this afternoon show so we can have somebody to knock it around with. All right, let's start with, one quick thing. Buy them. Okay, moving on. Let's start with the macro. The Dow was up 500 or 1.5% today. The NASDAQ and the Standard & Poor's were both up about 1.2. The pre-market, when I looked 3 minutes ago, was flat as a pancake. Oil was down big today and is bouncing back a tiny bit, sitting at 82.75. Pretty much right exactly in the middle of its recent spread from about 67 to 94. Bond yields are up on the day, and then they were up another 2 basis points when I looked a few seconds ago, sitting right just under 4.9 on the 10-year. Be nice if it would get stuck there. That would be okay with me. So my favorite analyst, Jerry Siegel, says November is the second best month out of the year, and that's looking back 25 years. So October is this horrible month, which it turned out to be for the stock market and for Tesla. But November, it turns out, is the second best month for stocks all year round. He goes on to say that we are currently 15%, the stock market in general, I think the Standard & Poor's, is 15% above last October's low. Now, keep that in mind. He also says it's the perfect time to invest for the long term for 3 to 5 years out, because you're sitting at 15% above the most recent low. You're not going to trade, you're generally speaking, not going to get a better, by trying to time the very bottom, you're not going to get that done, and it probably won't go there. He says that there is right now that while the overall Standard & Poor's is sitting at 16.5 times next year's earnings, which is in the middle of, kind of where you think things might be. If you take out the Mag 7, it's at 11 to 14 times earnings, depending on whether you're talking mid caps or large caps. Growth better next year is what he's expecting, and he thinks that these numbers on the rest of the market, besides the Magnificent 7, is oversold. Now, Larry Goldberg said on Friday, yeah, except if you look back over the last 20 years, it's been all about those tech stocks, and the rest of them are not in favor. But if they have the earnings, if the earnings are going up as they are in the third quarter, as they're expected to go up more in the fourth quarter, if they continue to go up in 2024, which is what Jeremy Siegel's saying, then yeah, you're going to have to pay more for them. I mean, that's just the way it works. All right. This is from Fox Business. Fox Business is not a very good business page. Their news page is great, but their business page is terrible. Their business page is very definite. Their whole channel, all the conservatives are really down on EVs, as I've mentioned many times before, and that's coming from someone who is a conservative. So this article says, just like Ford's Edsel, in the 1950s, the Trump administration economist Steve Moore cautions that electric vehicles may be the auto market's next big flop. How out of touch can you possibly be? Henry Ford's son was named Edsel, and he was going to be the great car. That was going to be the great car. All the executives said, this is the car everybody's going to want to buy. Historically, it's said that the Edsel was ahead of its time, was the problem, too far ahead of its time. Ford made 500,000 of these new cars, but guess what? Moore said on Varney and Company Monday, nobody bothered to ask consumers whether they wanted that car. Of course, the Edsel was one of the great flops of all time. The economists continued. I'm here to tell you, if the trends continue, we're going to see the EV market become the next big flop because car buyers don't want them. Except that Tesla said Model Y is the best-selling car in the world, and Model 3 isn't very far behind. And that was in only 3 years. It went from nothing to being the best-selling car in the world, and it's continuing to grow rapidly. And in the United States, in California, it's the best-selling car in California. And it's the best-selling sedan in the United States. I mean, what do you mean flop? It can't be a flop. It's already a massive success. Oh, you mean those other car companies and their EVs are flops? Oh, maybe that's what he should have said. So if this worries me, the thing that really worries me about his comment here is that this guy was helping to run U.S. economic policy. Oh, yeah, but so is Robert Reich. Oh, yeah, I can think of a few others. Oh, my gosh, that's right. Oh, all right. So I actually placed this here to capture the mood that Brian White and I discussed earlier today. If you didn't see that particular video, you need to see it. I will try to remember to put a card up later on that. The mood about EVs is not good. And some folks have a vested, or they have a political, or they have a philosophical vested interest. They can take out of context numbers and out of context statements of the past few weeks and make a case. They're against EVs. They don't want them to succeed. And it's not that hard to find stuff right now that will support their points of view. Well, let's look at this one. The Washington Post, who you would think would be championing EVs, has this headline today. A two-speed electric car market is heading for a crash. Really? You know what? I didn't even bother to take this one apart. You can go read it if you want to. It's nonsense. They don't even come close to trying to make the case that they make in the headline. It is total clickbait because that's not what the article is about, and they never actually make the argument. So, and I saw several of those today, a lot of clickbaity headlines today. Anyway, so Tesla's going to get tarred with that same brush, but there are things that are causing this concern. So we had the announcement by Panasonic earlier today that they're slowing sales in Japan, are causing them to slow production in Japan to balance inventories because high-end EVs in the United States aren't selling as well as expected. And that would be the S and the X, because what else? Okay. But then there was this. This is from Gary Black. He had this posted on X today. Tesla weakness could also be due to the big ON on semiconductor guidance miss. ON sells silicon carbide chips to EV makers and cited increased risk to automotive demand due to high interest rates. ON sells to automotive players with over 50% share of global EV sales. So I have been figuring that maybe about 4 to 5% of the recent slide in Tesla was due to, up till today, okay, was due to the miss on their numbers, because they did miss. They missed everything. And Elon's glum outlook in the earnings call. But I was figuring we would get that back and more during the next 2 weeks as people started looking forward and as the overall market became better, as more risk on. Instead, we've been hammered by a dozen, maybe more than a dozen now, negative headlines about the EV business, of which about 2 of those were Tesla specific. So at this point, we were 12% down before today. Now we're 18% down since the earnings call. And my feeling right now is the entire 18% drop is due to this sentiment change towards Tesla that was exacerbated by the sentiment change about EVs. And we do have to keep that in mind. CNBC today worried about the on market close as to whether the market is worried that Elon will have to sell more shares. And this became a thing on X today. So they said, oh, well, that big drop, maybe that was because Elon is selling shares right now. Well, I don't think so. He promised he wasn't going to do that in 2023. I don't think he needs those shares right now for Twitter. The big deal would be, oh, the banks are writing off some of their investment in Twitter and blah, 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 blah. Nobody knows anything about it. Believe me, this is pure speculation. There's nothing to underwrite it. And so, no, I don't think Elon is selling shares, but the perception that he might could be contributing to the down day or the down 10 days, 12 days. So I'm inclined to think it was more of the 1-2 punch of Panasonic and ON, whichever way you pronounce it, on semiconductors. That 1-2 punch adding to all these other negative headlines. So Forbes provides us with more nonsense to keep the negative thinking going. This is an article called 5 Reasons Why Electric Vehicle Sales Have Slowed. I guess start with the premise. Tesla and BYD sales are up. So if you start with the premise, you start with the headline. It says electric vehicle sales have slowed. 5 reasons why they slowed. But Tesla is up. BYD is up significantly. And there's another bunch of BEV companies that are up. And there's even brands within companies like Volkswagen and others where, Polestar and Volvo and some of the Geely brands and some of the SAIC brands that are up. And but so it doesn't, the electrical vehicle sales haven't slowed. In fact, they're up overall compared to last year. I'm not sure where it's going to end up, but estimates were they would be up 50 to 70% this year compared to last year. And there's no evidence that, I don't think they could show me any evidence that they're not going to be up another 50% next year. I don't think they have a dime's worth of evidence. So tell me in the comments below, am I wrong? Anyway, here was their 5 reasons. Unfamiliarity with the product. Automakers initially touted EVs as electrical variants of traditional combustion vehicles. No, they didn't. Well, maybe they did 15 years ago, but Tesla's always said this is a computer on wheels. Anyway, this couldn't be further from the truth, as EVs are as dissimilar to pure combustion vehicles as propeller aircraft are to jets. EVs are less complex to build, more technically advanced, require far less maintenance than their gasoline diesel-powered equivalent. Consumers don't understand all the nuances between these powertrains, especially because of the added initial cost of EVs, because the added initial cost of an EV pays for itself with a much longer and less expensive service life. Well, that sounds like all kinds of good reasons for EVs to be completely dominating the market. And these people are assuming that people are stupid. I mean, they might be uninformed, but they're not stupid. So how can it be that in California, do we have smarter people in California? 25% of the cars being sold in California right now are BEVs. What about the Netherlands and Denmark and Germany? And what about China? Are they smarter in China? Is that why they're buying so many BEVs? Oh, I don't know. I think we got just as smart people here. I think that there's other reasons, but that certainly isn't one of them. Lingering concerns on range. Now, this one might be. I'm not going to read the whole thing on this one because there's no question. If you buy a car that doesn't use the Tesla method, these NACS method, you're going to possibly have some range anxiety. But if you buy a Tesla, nothing in this paragraph about this says anything about Tesla being fine. I'm kind of shocked at that. You'd think that would be part of the article. They do talk about the fact that the average driver shouldn't have any range anxiety at all because they're only going to drive 35 miles a day, and you can charge that overnight. So anyway, I'm sorry. The lingering concerns about range are a concern in the United States, and that might be a sincere one, but they could have put in there that for Tesla, there's charging stations everywhere, and they're growing rapidly. They could have also pointed out that this is going to change next year in a significant way, as Ford even announced today that they're adding thousands and thousands of charging stations to their list of places that can be charged, their cars can be charged. All right, then it says, how about a limiting charging network? Isn't that the same story? I think that's the same story. That's two. Those two are exactly the same. Then it's early adopters have been fulfilled. So yeah, there's always early adopters. People like to buy the new technology when it comes out, blah, 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 blah. Guess what? Same story as the first one. Yeah, the early adopters in California have all been satisfied. And the middle adopters are not being satisfied. And the folks that come late to the party, they're being satisfied. 25%. Or you go to is it the Netherlands? I forget what, Denmark. One of those. I can never remember which one. One of the European countries now, it's over 90% are buying BEVs. They're just way smarter there. I guess that's what it is. And, they're early adopters as the entire population. Some of the other countries in Europe are running at 50 and 60%. It's because they're just, all early adopters. I don't know. I'm sorry. High interest rates. Electric vehicles are more expensive than their combustion counterparts. Not true. Currently, Teslas, in fact, the entire industry are now about the same as the average cars, and their sticker prices are pretty much on parity with the same quality car. If you were going to, a Model 3 now is better by far than the cars that you can get for the same price. And that's not even taking into consideration the $7,500 savings from the IRA. Anyway, the post-pandemic economy seen interest rates go significantly, which has slowed all vehicle sales. No, vehicle sales are up this year. This is what I deal with all day long. I'm sure you do too. Anyway, I'm going to leave this now. It's too hard. So where to from here is a really good question. As noted this morning, there are catalysts for Tesla coming, but sometimes even the catalysts find it hard to get into. They find it hard sledding if the narrative is going the other way. One can sure make the case that the overall stock market has retraced its bull run, is in correction, over 10% down, and should start the move up in November, the second best stock market month of the year. One could also easily make the case that whatever the narrative, Tesla has also retraced by over 50%, barely, but just barely over 50% as of today, and is oversold going into its solid earnings and growth prospects in fourth quarter and next year. And not even counting just cars, but also energy, etc. As noted this morning, it might take some serious real numbers showing sales, actual sales, and longer wait times, maybe some more price increases like we saw the other day, maybe seeing the specs on the Cybertruck, and maybe some other news about energy, like opening the Shanghai facility or something like that, or maybe somebody licensing FSD. Well, those are things that could happen. We might stay mired in these depths for a while, or the positive, Randy says, we could also see some real bargain hunters moving in, especially if there is more positive sentiment in the market overall, let's say after Powell speaks on Friday, or after we get the consumer confidence numbers, or after we get the employment numbers on Friday. So many things happening this week that could definitely change sentiment, not the least of which is the number of companies with earnings this week. So we'll see how the earnings season has gone. So where are we now? I think I went long again. I'm so sorry. The US 10-year is now actually only at a little over 1 basis point up in the after hours. So now just under 4, it's right at 4.89. And the 2-month is up 3 basis points, and 2-year is up less than a basis point. So all over the map on those guys. Let's look at the other indicators right now. We have got the pre-market is now exactly mixed. I mean, no use going through it. It's like flat, just count it as flat. Crypto is down just a little bit from earlier today. The Japanese yen is up a little against the dollar, but the dollar overall is still way up there. Gold about flat, $2,004, $2,005. And oil up only 30 cents now, sitting at 82.62. And then let's just for fun look at the after hours number, almost at the end of the after hours for Tesla, down 0.64 after hours, 0.64%. Anyway, so you get it. So hit like if this was good, if this helps you, doing this at the end of the day, in addition to the after the bell program that we do in the morning. If you think this is a good idea, please hit like right now. So you let me know. Let me know in the comments too. Maybe you say, yeah, Randy, keep this up, but get a co-host, man. You need somebody to play off of. Or not. So, and then of course, hit subscribe and hit notify. We've got Brian White on again tomorrow. He'll be on, what did we talk about? We talked about his new car, or did we do that today? I don't know. Sometimes I get confused, but I can tell you it's a great show. That's what I can tell you for sure. And I know what. Anyway, so it'll be a secret, but you guys love it when Brian's on. So make sure to hit notify so you get notified about that. And then you want to join Patreon. News all day. As soon as I see anything breaking that I think is valuable that you want to see, I put that up on Patreon. Only costs you $5 a month, and you can do a free trial for 7 days. And of course, you can get it free, basically free. Well, you pay $10 for this. That's what you do. You can join Patreon for $10 and get this free, or you can pay me $10 for this, and I'll give you a month free. Anyway, it's Patreon at the $10 level. You get this for free. And if you want to buy it for and not join Patreon, it's $25. 2 of them are $45, 3 of them are $65. I'd love to have you be part of the Cybertruck family. It's such a great gift. All right. I think that's all I got for you. I'm going to say goodbye, and it's been great talking to you.